Hello, ladies and gentlemen. Welcome to episode 5 of PGIM India Mutual Fund presents Live Mint, Amend, Adjust, and Adapt. That's, of course, a series of high-power panels that we've been doing, looking at the world after the coronavirus. I'm Vikram Chandra, founder of Heritage, and today we're going to be taking a look at India among emerging markets. You know, all the years I kept on going to Davos, the people would always tell me, we're not worried about the Indian market. We're not even worried about taxation. We're not worried about incentives. We're not worried about any of that. The market is great. We know we'll eventually be able to do a great business out there. We're worried about things like regulatory flip-flops. We're worried about things like tax terrorism. We're worried about we will come and make an investment and 4 years later, somebody's suddenly asking us questions about that. Is that what you're referring to? And is that the big area of concern?
The 2 or 3 big areas, Vikram, I don't know whether you are aware of this nuance. See, the Reserve Bank, that TLRPO, the new repo auctions, were not as successful as they should have been. Partly because banks are flush with funds and don't know what to do with them. The banks don't want to lend. If the banks have to be proactive, if the banks have to be risk favorable rather than risk averse, and sometimes you have to take risks in a economic situation like what we find ourselves so that we kick things forward. The banker has to be assured that his decisions will not land him in Arthur Road or Tihar. And that can be achieved very easily because there is, according to me, a completely wrong judgment of the Supreme Court saying every banker, including a private banker, is a public servant. The moment you apply the public servant and the banker gives a loan and the loan runs aground, it's very easy to say you caused a loss to the bank, i.e. the government and the bank then become synonymous. So you caused a loss to public funds and a private gain to somebody. That is why bankers today are very scared to lend. It has become a very bureaucratic procedure to do lending. That is one major deterrent which scares people away. After a person comes in and invests $4 billion, $5 billion, $10 billion, are you going to walk off with is the ED going to walk off with the plant and leave you with the shell of the company? The government amended the law, promptly amended the law, but the ED refuses to give up. Now, these are the kind of things which scare people.
Quite often, before the pandemic, if you thought about the poor in India people who may need government support, you would have said it's the rural poor, right? The urban poor were really not spoken about. Migrant workers, not really spoken about. Look at something as simple as you're talking about the PDS system, and that's correct, but ration cards quite often linked to the place where you come from. If you're a migrant worker, and this pandemic, March, April, was really underlined by the plight of the migrant workers and the urban migrant workers and urban poor in particular. So is that something which you think has really been underlined as a result of this? And let's not forget there are large numbers of urban poor and migrant workers, and things like now that one ration card, irrespective of whichever state you are, that might be something else if we eventually will emerge with this from this.
I think this is one of the pivotal shifts that is about to emerge in India. I have to add that this whole story of vulnerability, India, because of its past growth, took about 150 million people out of poverty, but not out of poverty into a secure living, but into a vulnerable living. So any shock can pull them back into poverty. So this whole social protection is about not only the extreme poor, but also the vulnerable. And if you look at the vulnerable, they are in the urban area because India is urbanizing. The future lies in the cities of India, and they are urbanizing. So this shift into a pan-India social protection system, which deals with the shocks, and more shocks will come, I think is one of the storylines that we will have to observe.
So if I could come back to you now, you are talking about some of the fiscal stress. Now, many people, and we've done these shows before, where many people have said, why not a bigger fiscal stimulus in India? Why are we following, sort of monetary policies and supply side and the rest of it, and not doing a good old-fashioned Keynesian, demand stimulus? And it's still not really come. Do you foresee that? And is that something important? Because the themes that you were also referring to, spending more on healthcare, spending more on education, defense spending is going to be required now with the situation on the border, and above all, perhaps infrastructure, which is something that India really needs. So do you see that this is the point now where all of that is going to come?
I would think so, Vikram. I think, the broader framework of assessing what fiscal response needs to be broken up into two parts. The fiscal response so far, which has been more survival kind of measures to support businesses and households to stay afloat. And I would suspect that on this survival mode of fiscal support, there's still a bit more that needs to be done. For instance, there are sectors like tourism, hospitality that will be underwater for a lot longer. So they still require the survival style of fiscal support. But the second aspect of fiscal support, of course, is the Keynesian demand stimulus, and I think the time for that is sort of here now. The question, though, is what kind of demand stimulus do we want to give? Do we want to give a consumption stimulus, or do we want to give a more investment stimulus?
Right, John. So obviously the money is limited. But if you were sort of trying to just take a look at India's investment opportunities in the sectors that India should be now sort of investing in or spending in it to the extent that there is some fiscal room, what would be the areas that you would suggest?
There are two broad themes that are going on here. One is, actually three themes. One is the immediate crisis. Two, the longer term structural issues. And three, the China tensions. And all of these things are probably going to provide various opportunities. So in the case of India, in the short run, through this crisis, I think there has to be more investment in infrastructure, and given, as Sonal pointed out, given some of the constraints in terms about public finances, a public-private partnership is probably going to be needed, and that is probably an area where opportunities there are opportunities for investment.
When you talk to investors, you talk to industrialists wanting to look at India, quite often and this is not a new grouse, has been their grouse for all time to come, is red tape and bureaucracy. Now efforts have been taken obviously to reduce some of that red tape and bureaucracy, but there's still quibbles about, is there too much complexity around the tax system, and could you have a situation where overnight, telecom licenses are cancelled or coal licenses are cancelled? Is that something that worries you and other investors you speak to, or is it less now?
It worries us, but I would say it's better described as just an annoyance. It doesn't change our overall view of what we think of India and how we're going to invest. But it's true, it would be nice if some of these things could be simplified and made more efficient.
What in particular would be some of the areas that would give you a lot more comfort? Look, you're already overweight in India, but what would give you more comfort to tell everyone this is perhaps the most exciting investment story on the planet right now?
Well, the first thing would be reform of the tax system. For us, for example, we're subject to capital gains tax, which makes it very, very complicated to calculate this gains, losses, back and forth. When you're running multiple funds and you're in and out of the market, capital gains tax calculation becomes much too onerous and expensive. So I would say that's the first thing that has to be changed. Then I would say overall the movement of capital in and out of the country has to be simplified, so it's easier to come in and also get out. So these are measures that are very, very important for foreign investors.